Tess, can you hear me? Yo, what up? How's your Sunday going? All right, hold up. Let me send you guys the link too on Discord. All right, hold on. I'm seeing if I can. It's like one of the first times I've gone live, so I'm trying to figure out the chat windows and stuff. Pretty sure I can do it in OBS. I can just pop out the YouTube chat, I guess. Everyone has a different YouTube name than their Discord handle, so I don't know who's talking. All right, keep it civil in the general chat, just in case I open up the window. Well, looks like Bitcoin's rallying, so looks like we're gonna get a gap up. This is just Serenity's personal server. He doesn't keep it open all the time. How many people are in this shit? There's only 80 members. But every now and then he turns it on and just chats. I wish I could play music, but I think it's all copyrighted. What do we think? Is Alex Karp on drugs?
Products, no one, enterprise, large data sets, going to government, acknowledging American superiority, being pro-meritocracy, launching an AI platform, calling into...
I like how they're turning this video into a advertisement. Oh, those pictures aren't real. Everything in the background is photoshopped. Nobody wants to live in Paris anymore. It's because everybody in Paris is poor. They don't pay any wages. Just a plate of fruit. I just went on a few mile run. Trying to get back into running. I have some friends who run full marathons. I don't know how they do it. Percent's just pumping every other week. Looks like inflation is solved. Yeah, this is a bottle of ketchup. You gotta always have the beverages on deck, you know what I'm saying? I gotta light a candle for you guys. You know what I'm saying? Got this in Japan. We're not going to get rug pulled, but your account is. No, I'm not concerned about Microsoft or Meta deals. It doesn't matter if they fully utilize it or not. They're still going to have to pay for it regardless. So Microsoft and, well, at least a Microsoft deal, they're taking the risk. Damn, this candle is like turned to shit. I'm gonna need to maybe light some incense instead. If AI growth slows more than expected in the next 2 quarters, that's not gonna happen. I think if you listen to the Nebius UBS conference, Mark Robitsky, the CRO, was talking about how inference is growing 40% faster than the infrastructure being built out. Which inference is really just once AI is fully operational, right? We're actually getting the use out of the training of the model. And that's not going to slow down anytime soon because it's like all the Facebook moms now are starting to figure out how to use AI. All right, so this, for you guys, I'm going to put you on some culture, right? So I got some authentic Japanese incense. And you can get all different kinds of different scents. This one is Ironwood Thorn. I actually have a different one. This one smells like licorice. You just gotta set the vibes when you start charting. So you put it in here. This is a brass holder. Shit, I don't even think this lighter works. Looks like we're gonna be without incense. I think I need to refuel. Sorry guys, another time. $0.99 for a moderator position. This is organic kombucha. Drop shipping. Yeah, you guys should buy all these products, these incense holders, candles, and kombucha. What other products can I sell you? I got an extra keyboard. You guys want this? Should probably just give away a bunch of stuff that I don't use anymore. It's better than getting something brand new. All right, let's see what else is going on. Everyone's saying that the Netflix deal is not going to go through. We'll see. Sell Chegg. All right. Got some propaganda here on the feed. Price target for TE. I don't know. There's the TE hive mind is multiplying on Twitter. I tried to join one of the, what is it called? There's like a TE investors club now you can join. I think he's the one, Daniel Koss is the one who started it. Like, can you just not search communities? No, here we go. Does it say how many people are in here? So there's 466 members now in TE investors. Like, everybody's on this. Like, Spokane, he's in the space like Rocket Lab, SpaceX, things like that. He's like one of the bigger Twitter social media profiles covering that space. And then now everybody's pretty much just piling in on T1 Energy. How much is a painting? Probably like a few $1,000s each. They were like passed down to me from my grandparents, so I'm just holding on to them. Cut to the chase? Cut to the chase of what? Ogmo. It's on site. What about EOSE? I mean, it's like the same thing, right? Like, T1's great because it's all US based manufacturing of solar modules and cells. There could be a potential US government investment behind that with the Genesis mission. Like, small nuclear reactors are what Jensen said 6 or 7 years from now. So in the near term, it's all about solar. You also have Google saying that they're going to build data centers in space using solar panels. A couple grand is insane for a rectangle. But yeah, I think like TE, you got to be careful of dilution, right? Like, it's already run up crazy. And this is a massive move in such a short period of time. We're at 253. It's gone up 133% in 3 weeks. Nebius should announce something soon, probably in the next month or so. Yeah, I did the same thing with T1. You can try to roll. Let's see, so that's the one thing with T1 that it's just hard because you know they're going to dilute. So like, I sold half of this position since I was up 109%. So we took profit on half of those just because it is getting closer to that $6.11 resistance level. But I did sell some covered calls. I sold them too early. So like, I have these 3 sold $6 covered calls. I'm down 45% on them. That's not too bad. You could try to roll the position. So right now they're going for $1.70. There's no May expiration, so I'd have to roll to July. I could roll to 7, but it's just like, I'd rather realize, you know, either close out of this position completely, get my money, and then just enter in again once there's like a dilution headline. That's probably more effective. Otherwise, I'm just waiting for my money to get assigned in July. So it's not really worth it. But yeah, I think they will dilute at some point. So not too worried about if I'm underwater on the covered calls, because I think later I'll be able to to roll the position again, or even just close out of it at a profit. But it is coming up to the 611 level, and that's been like resistance in the past. But it did break out pretty strongly here. You can see how once it got through, I think it was last Friday, it closed like right over this level, but under 419, and then it just continued much higher this week. But the overall market is probably going to break out and go to new highs. Like here's that uptrend, and it's just kind of coiling, right? Like we had the big washout, the gap fill down to 652, and now we broke out of this downtrend, broke over that, and then we reclaimed a bunch of different levels, even after that big sell-off after NVIDIA earnings. I'm probably just going to hold mine on the covered calls. Like you don't want to roll too much, because if you roll and then they dilute, then you're not in a good position. It's almost better just to like realize max gains on getting assigned, losing your shares, and then just receiving the credit that you got from the covered calls. Most likely, I mean, TE could keep pushing and you'll kick yourself if that happens, but whatever, like you still made good profit regardless. Yeah, like whenever you're selling options, it's more of like a math function, right? Like you're thinking about it correctly. Like how much you'd actually miss out. Like I think I sold, like I have a lot more shares in my other account, and I sold covered calls a bit too soon, and like the covered calls that I sold they went up like 200%. But thankfully I didn't completely cover my position. I just did it gradually over time. There's like a form of profit taking by selling covered calls at different key levels. Yeah, I mean, there's like a lot of layoffs, obviously, and partially due to AI. But in the long run, like there will be a larger correction. Right now, I'm not really too worried about it. Q1 or Q2. I mean, like I check Zillow every single day, and at least in my area, and I'm in like a bigger market. Since I'm in Florida, there's a lot of people moving. But yeah, there's a bit of like a slowdown. A lot of houses are sitting on the market for longer, and there's price cuts. Is there a date for TE dilution or price target? Not necessarily. There's just a company that's reinvesting a lot, building out these large facilities. So there's a huge CapEx requirement behind that. Well, let's see. So obviously, Nebius, still very bullish. Underlying financials, fundamentals are great. There's sector tailwinds. As far as like a technical perspective goes, I mean, we kind of been hanging around this like $95 to $100 level. We keep rejecting at this 102 area, right? Like it's pretty hard to break out. We're at least now trying to reverse out of this downtrend. Right, so you had this downtrend. We kind of pushed through. We had a retest on the 1st of December, and now we're starting to push out of that. So that's pretty good so far, at least for a reversal. There is like some improvements on oscillators, so like MACD flipped green. RSI is also trying to get over that 50 line. So there is some at least positive developments that bears are starting to lose traction on the stock. I think like this stock obviously can have wild swings. So Samir, your voice so low. Yeah, I don't know. I mean, I can move the mic closer. I just don't want it to start sounding too punchy. Let me know if this is a little better. But yeah, I would just like to see it get over this 105 level. In the selling options port, we have the 106s. So we sold these. We've been rolling. We're down on this position now just because it sold off on Friday. But I'm okay with that. Otherwise, I would have got assigned. So I originally had the 102s for Friday, and then I rolled the 106. But overall in this position, we're doing pretty well. If I do get assigned next week, I might just let it get assigned next week if it closes under 106, but I think there's a pretty decent probability it gets over. Yeah, the way I would play it is, like I have naked shares. I did sell some covered calls in my other port, but ideally you get a move towards like 115. And if we look at moving averages, that's kind of like in this 110 to 115 range. It's not a bad position to sell some covered calls. I would probably, if you're just afraid of getting assigned, especially if you're in a taxable account and you're looking to hold long term, like I would be selling like at least probably like 135s. The premiums are high, so it's not too bad of returns, and it's unlikely for you to be assigned unless they announce something. But even if they do announce something, you got that convertible note level. The conversion price is right around $139. So you can just sell covered call. You can roll your covered call into this 145 to 150 range like a week or two out, and it's more than likely that, at least the hope is that it won't blow it completely out. But if it gets over this like orange line that you're seeing here, that's a break of a downtrend, which would be obviously bullish, but it might take some time to actually get through this orange trend line before making that move higher. But we'll see. I mean, overall, I'm like super bullish on all risk assets and growth stocks going into next year because they're just spending so much money. All the Mag 7, there's just so much CapEx that's going to be flowing, especially if they're using debt. Like I think that's bullish as well. But like, yeah, all these stocks I think are just going to go berserk, especially like Tesla, Meta. I think Amazon is just one that's just been trading like behind everything. It should be trading much higher than it currently is. How do you roll positions? Just not run the math to figure out what makes the most sense. So the general rule of thumb when you're rolling a position is you wait until it hits your break even. So say like on Snapchat, for instance, let me see if I can remove some of this stuff. Let's say you sold like a $10 call or something, or a $9, $8 call, and it was like 30 cents. Well, when the actual underlying stock price goes $8 to $8.30, so like $8.30 is your break even because you receive 30 cents. When it hits $8.30, you would roll your position. Now, that's like the rule of thumb in general. Once it breaches your break even, you roll it like a week or a month, whatever. Usually you try to, depends where the stock is, right? Like if I think Snapchat's going to go to $10, then I might actually roll it at a debit because I want to open up more share appreciation on the covered call. Like if I roll to an 850 strike, it's probably going to just blast right through that anyway. And then I'm going to be underwater again. And then I'm going to have to try to roll it to another expiration. But if I think the stock is in a breakout mode and it's going to make that move to $9 to $10, I might roll to $9.50 or to $10. So then I have more breathing room on the covered call. But yeah, in general, especially if you don't want to be assigned, you want to be playing a lower delta on the covered call that you're selling. And if you're ever in a case where you need to roll, you probably might want to do it at a debit, especially if you don't want to be assigned. But in most cases, you can get a credit if you do it correctly when it actually breaches through your break even. So just rolling up and out essentially is all you're doing. Ogmo, Ogmo, whatever, man. It's just easier to say, less syllables. The rate cut is December 10th. I know everybody's obsessed with ONDS right now. I mean, stock chart looks great. Like it recovered really well off the 100 DMA. Let's see. Yeah, I mean, there's a little bit of a resistance here at $9.30, but if it gets over that, you can definitely see it push for all-time highs. Looks like earnings went pretty well. $3.34 market cap. I haven't done a lot of research on this company. Yeah, I mean, I could just put the streams out. I think you can just publish them to the YouTube. I'm just chilling for the most part. I'm probably going to do a bit of a deep dive on Snapchat as well as Upwork and Zeta. I've been listening to Evan on Snapchat and like what their plans are for next year. It looks like they're putting a lot of investment into specs, which, you know, they're partnering with OpenAI, but it is a heavy CapEx type of play for them, right? Like the company doesn't really care about profitability, at least historically. So that is kind of like a double-edged sword, whether or not they'll be able to compete with Meta or Google Glass type things, right? 'Cause now everybody's trying to build their own glasses, AR, VR. But the big thing with Snapchat is really the Perplexity AI deal, which is using AI within their app. And then the storage plans when they start monetizing that, which probably won't be until Q3 of 2026, but you would hope at some point the market starts to price that in. But there could be some big headlines or investments into Snapchat to help them realize that strategy around specs. So we'll see. But from like a technical perspective, Snapchat's such a great position right now, especially because it's really oversold. They did show some reacceleration in Q3 of their, I think it was revenue. Their daily active users is like massive. They're continuing to grow. Yeah, they reaccelerated a little bit in Q3. I think it was actually on the DAUs that I was looking at. It was like 9% growth in Q3 versus 4% in Q2. But yeah, I think this company will do really well next year. It's all about scaling, monetizing, and then profitability. So, yeah, Upwork, Zeta, and Snapchat, and obviously Unity. Dude, so many people use Snapchat. Frog. Yeah, I mean, this is just like a big, massive cup, right? Just having a really strong move to the upside here. Directors selling 50,000 shares. I guess what's the bull thesis on Frog? Scamming you with a course? What course? This is the course. You're watching it right now. OG Mo. Of course. All right, let's see. You know, if you just look at Frog and then you look at Upwork, right? You see this massive cup? It just goes to the moon, right? This is just going to go parabolic to 100. Snapchat's at the bottom of the abyss right now, but then Upwork's starting to break out of that cup. Dude, I don't even know how to monetize YouTube. I wish. I make like no money on it. Let me see, I can show you what my stats are. I don't know if that's allowed, but screw it. This is like, honestly, you have to be chronically, probably streaming. I think you make more money streaming than you could just by getting ad revenue. But here's like what it looks like, $46. So I'm probably going to quit my day job, retire, go all in here. That's just only in the last 28 days. This is how much I've made total. So yeah, it takes a lot of work, and you know, usually doing work for no reward on the end of it is extremely difficult to do. Most people need some sort of reward, like Pavlov's dog, to actually do the work, but I enjoy it. I mean, it's fun, but definitely not for money. Looks like they also presented at UBS's Global Tech Conference. All right, we're not going to read all this. What we're going to do is just plug this all into AI and ask it to summarize. I mean, usually getting into options trading, you lose a bunch of money in the beginning. That's usually how you get into it, but you can just enable it on your brokerage account. And then you just have to understand like the basics of options, which you could use Investopedia, ChatGPT, whatever you want. But really, it's just a derivative. It's a contract on the underlying stock price. And there's different ways you can create a system, whether you want to day trade options or swing trade options. You want to sell options. You want to do different options trading strategies, like multi-leg contracts, things like that. But it really just depends on what works best for you. A lot of people say that trading is mostly emotions. So there is a bit of a, managing your strategy, sticking to your strategy. That's where emotions can sometimes get the best of you. I mean, do I even have how many viewers do I even have right now? I don't think I have that many. I can't even see. One of you guys tell me how many viewers there are. Let's see. I think I can see it this way. There's like 5 people in here. That's it. Nothing crazy. No, 14. I guess only 5 are on chat. AI is a big game changer. AI work on Upwork is 300 million run rate, growing 50% year over year and accelerating. Well, that's pretty much what my thesis was earlier in Q2. Yeah, this is like the crazy part is like freelancers are just using vibe coding agent runners to complete work on AI's Upwork's platform. 100 million in GSV lift during 2025. Is that so? It's not the size that matters. Who's working on a Sunday? I don't know. Melk doesn't really post anymore. He'll hop on chat sometimes, but he's super serious now. He's a young professional. He got his internship. P. Diddy doc. Is that any good? My girlfriend was watching it. I didn't really pay much attention to it. It's like really popular amongst the younger generation. There's so many people on Snapchat. I mean, I still even use Snapchat. It's like a way to just shoot off a photo of something to your friends rather than like texting them. You don't have to put much work into it. But they do have like the spotlight feature, which is similar to TikTok and Reels. Like most of their revenue is advertising through their platform. I think a lot of the younger generation just looks at all the stories on Snapchat, like of their celebrities or streamers. It's just like brain rot, basically. Kind of boring. Yeah. It's pretty funny that 50 Cent got the rights to all those things. He just hates P. Diddy for whatever reason. Let's see. It's all just like features to improve their platform. This is like the one thing that I think could be a big thing for them is the enterprise offering. One contract type, 10% of enterprise spend. And these are the 2 acquisitions that they announced back in Q2. Let me just look at the TAM of that. And yeah, this is going to take a little while to roll out. Just supposed to start in Q1 of 2026. And then if you think about, all these different companies that had these mass layoffs, I think like Amazon, Dell, just like all these different companies that are laying people off due to really just being able to replace them with AI. They're going to want to use flexible talent when they need to strategically, and so they could just use Upwork's platform for that. So I think this catalyst number 3 is going to be a big deal for them, especially now that you can pretty much hire anyone anywhere in the world through their platform, through these 2 acquisitions that they did. Let's see. 5,000 and rising. Yeah. I mean, this is pretty obvious for them. They said that they're going to give a 12-month grace period from, I think, September or October of this year. So, that puts it into late next year. They're just like, they don't want to piss off their user base too much because a lot of people have years of storage of different things. And so they're giving users time to go back and declutter, get rid of those random Snapchats that they stored that they don't really want to keep before it actually goes live. But obviously not a lot of people are going to go back and like look through and sift all their images and videos and delete what they don't want. They're just going to end up having to pay. Unless they just don't want to keep them. And in that case, Snapchat can delete those memories, and then that lowers their hosting costs. So it's a win-win. They either make more revenue or they recognize savings on their costs. Yeah, I mean, I think like housing builder, construction companies, like interest rate sensitive businesses and sectors are probably going to do well. So like I think different housing stocks will actually probably do well before shit hits the fan. Yeah, I mean, like, you just got to imagine, like, how many times, like, when you're trading futures, right? I mean, we can just go look at, like, Bitcoin right now. Like, what is this price action, right? Like, it's hard to make sense of something like this, right? Like, you could say, like, oh, it's breaking this trend down. It came down. It couldn't hold it, and then it just dumps. Well, it actually like printed a new low from the recent low, and then out of nowhere, it's just like straight vertical, right? So like when you're trading futures, maybe you took a long position here, you get stopped out, and then you're like, oh, it's breaking down. I'm gonna take a short position. If you don't close out down here or even up here or even there, you're just getting blown out. So it's like there's a lot of room for error when you're trading like 1 minute candles on anything. Someone who's teaching you like the smart value, ICT, the inner circle trader, like fair value gap, inverted fair value gap, liquidity sweeps, and all. Oh, there's liquidity sitting down here below this low. That's what you didn't realize, right? There's liquidity right down here. That was a little sweep. There's liquidity sitting down there. You don't really know if it's sitting there. I mean, you could use Bookmap and things like that to see. But they don't even use that software. They're just looking at candles and going, there's a bunch of liquidity sitting at this level. No, my main portfolio is on Fidelity. Then I also have Merrill. So yeah, I use those three: Robinhood, Merrill, and Fidelity. Like, you can obviously make a lot of money on futures, and futures I think are very situational. Like, if there is a lot of volatility, then it might be better to play futures because you're not, like, there's going to be a large movement in the underlying price, but you're not subject to the theta decay on playing like zero dated or even weekly options. I mean, TJR, he's just gonna lie about whatever. I mean, there's so many podcasts and clips you'll see of like, how do you make all your money? He's like, oh, I make a lot of trading. And he's like, is it the majority trading? No, of course not. There's no way he's making anywhere close to the amount of money that he is selling courses than he is trading. Especially if you ever watch any of his videos, he's just like, I'm just going to go short here. I'm going to go long here. And it's just like pure speculation. It's not like he's following anything that he's teaching. Like he'll make some things sound like he is, but at the end of the day, it's just pure gambling. Yeah, but the market's forward looking, Rico. So like the Snapchat stuff, it doesn't really matter. Like if it happens a little bit later, like the market will start to price it in before it actually happens. As they get closer to it, the market will price it in. Well, the problem with Robinhood is you get these really horrible fills. Like here's an example. Like I sold these grab 6.5 calls for December 12th because GoTo is having that extraordinary shareholder meeting on the 17th of December. And it's possible on that date that they might announce the acquisition of Grab buying or merging with GoTo. And so that could be a bullish catalyst for Grab stock price, which has been completely hammered over the last few months here. So I sold the $6.5 calls. Now, I could roll this position. I'm not going to. I'm going to leave it naked through the 17th and see what comes from that shareholder meeting. But on Robinhood, the problem is like I can't really roll this position. So I had the 12s. Say I want to roll to the 16th. I guess I could do this. I could roll to the $6 strikes. But if I try to roll this, like you'll see that the last trade was 12 cents for the 6.5 calls that I have right now. The last trade was 1 cent, but if I want to close this position outright, it won't let me do it. I have to enter 5 cents on Robinhood, and it's most likely going to fill my position at 5 cents. Whereas on Fidelity, it's actually going to give you a better fill. So you might fill it like 2 cents or 3 cents. And that's infinitely better than filling at 5 cents, especially if you have, hundreds of contracts. So it actually makes like a pretty big difference. So if you're like a bigger account, you don't want to be on Robinhood because you're getting horrible fills across the board. You want to probably switch to Fidelity or some other broker who's actually going to fill you, because what Robinhood does is they basically send your order flow to Citadel, and that's why you're filling at 5 cents. So it's like they're kind of just buying it at 3 cents and then selling to you for 5 cents and making the spread on you. So yeah, Robinhood's not very good, especially if you're selling a lot of options, which I am in my other portfolio. Even buying options, like, if I wanted to buy this call for $6, I would have to enter 15 cents on this. Like it has to do these increments, but I'll most likely fill at 15 cents instead of 13 cents. And if you're buying hundreds or thousands of contracts, it makes a really big difference. So you want to switch it. Yeah, I mean, I'm not trying to like expose anyone or anything with TJR, but I mean, it's pretty rampant. He's not like the only one. He's just like obviously one of the more popular ones, if not one of the most popular, especially with futures trading. But like almost no financial personality social media is actually showing their account. And if they are, it's most likely they just have made a bunch of money from selling courses and are just like buying a basket of like the Mag 7 stocks, and they're showing like, hey, I have $1 million, but like it's more than likely they didn't really grow that in any meaningful way. They just kind of participated in the market and then just like funneled their course selling sales into it. Like the thing that Martin Shkreli did when he blew up his account, like that's more admirable to me, actually blowing up the whole challenge port that he had, because he was actually trying to grow it the right way and show people with like 100% transparency, rather than just saying like, hey, I entered into this position, but there's no actual proof of it, which is what they're pretty much all doing. Or they'll just like flash a screenshot that they probably edited in post, so you don't really know if it's real or not. You just have to get used to the user interface on other platforms. Like Robinhood's like gamified. It's easy to understand. They have like certain little features in here that are kind of nice to have. Thanks, Seba. Appreciate that. I'm pretty old though, so been doing this for a while. Let's see what the Discord's up to. Thanks, Stanley. I am live indeed. All right, let's see what else. Did they really say anything in here? Yeah, I mean, this is like the most obvious thing, is that they're hitting an inflection point. Well, the strategy is going to change over time. Like, I could just switch to selling options right now at 28, 30,000. I could do that. So that one, Nebius, I'm going to have to watch that one for this week because I am selling in the money puts, so I might have to roll that position. It really just depends on what happens. Ideally, the stock goes up. If the stock starts going well above 106, my strike, then I'll consider rolling it or just letting it expire fully out the money so then I can collect. If the stock goes down, I could try to consider rolling it down for the following week, but I think I'll most likely will just get assigned and then start selling covered calls. So I might just like let it ride and see how it goes, at least later into the week, because anything can really happen. At least right now, Bitcoin looks pretty solid. So I think that we'll at least have a green day tomorrow. That's what I'm hoping for. And then hopefully Nebius actually participates instead of going down 5%. But yeah, my main strategy, I guess, in the beginning is taking a lot of risk, especially if you have a small account that's using leveraged ETFs, options, riskier stocks that can move much more in a short period of time. If I was just buying like Amazon or Apple or Google, granted those stocks have gone up so much this year that it would have worked out. But say I was just buying like SPY or QQQ, like I'm never going to get to $1 million in any sort of meaningful time. Like I'm going to be 55 years old and still making YouTube videos. So we don't want to do that. We want to try to grow as quickly as possible when the market gives us those opportunities. But the strategy really is like getting off the floor, trying to get to like 20, 30, 40, 50K, even 100K, depending on where the market is and where the opportunities lie. And then once you actually get to a certain point where you can now just sell options and make like a pretty good dollar amount on those options, which really requires you to have like 30, 40, 50K in your account because you have to have the collateral to sell the options. But once you can do that, then you can kind of switch to like a more risk adverse strategy, but just like covered calls or selling cash secured puts if there's a bigger drawdown in the market, which is like what Nebius did, right? Since Nebius dropped so much to that gap, that's why I started selling cash secured puts and was like, you know what, I should start this other portfolio and run this strategy. But you can see that like in a very short period of time, even on selling puts, how much money and percent return that is. Like $1,000 in about a week and a half is pretty good on a $10,000 port. And if I can just consistently do this, which right now it's a bit higher than it otherwise would be, right? Because Nebius has sold off so much and I'm selling in the money puts. When I actually switch to selling covered calls, I'm going to be selling those out the money. But if the stock price is trending higher over time, not blowing out my covered call, but just trending higher over time, that's like the best environment for me to make, not only collect on my covered call, but also share appreciation. Cause like, say I got assigned this week and cause it landed under a 102. I actually considered not rolling my puts to 106. I should have probably waited, but I just closed out. But I opened the position in on the same day. If I waited another day, obviously it would have been great, but I didn't know if the stock was going to go down or not. But say I was assigned the position, I would have owned, I don't know the exact amount. I think it's like $1,100 or so. So my 102 strikes minus $1,100, like I'd be around $91 or something like that would be my cost basis on the shares, since I already collected the credit. But say I was at 98 and I was like, okay, I'm gonna sell covered calls at like 110. Well, if it goes up to 110, I'm gonna get $12 of share appreciation on the 100 shares. So in that case, it'd actually be better to actually own the underlying shares, sell the covered call at 110 than it is to sell the 106 put, because the 106 put, I only collected, I think like 600 or I sold it for 750, which is pretty decent, right? 750 for the 106. So if I get assigned 106 minus 750, 98.50 would be my cost basis. So as long as the share price remains around this area, I'm okay. Plus I already rolled the 95s to 102 and collected, I think, $700 on that. So we're in a pretty good position. Actually, my cost basis would be a little bit lower. But yeah, like if I sold the 102s, it's not going to be that much money, right? So if I sold the 110, this went for $1.20. So like when you're selling covered calls, you want the stock price to go up. You just don't want it to blow your covered calls out, because then you're going to get assigned and lose your shares, and then you're going to have to sell puts. And if the stock just keeps running, you're missing out on all those gains. But yeah, I don't mind getting assigned. Even if like the stock price goes down, at least I collected that credit. It would have been better than just buying the stock outright 100 shares. And then I can start selling covered calls and try to make the money back, which I think Nebius will go up over time, so I'm not really worried about it. But yeah, it doesn't look like Upwork announced too much. They just kind of highlighted the things that I already knew at the UBS conference. Let's see if like anyone's actually talking about Snapchat on here. Yeah, I would just sell, if you have like 10, 20, 30,000, I would just switch to selling options if you want a less risk, decent return strategy where you can probably double your account every 12 to 18 months. You can probably double your account by selling options, especially in a bull market. I guess Mike Longterm is in Snapchat too. New all-time highs by 2030. Can you see it? I don't know. This is pretty straight up and down here. Yeah. So like Snapchat Plus is slowly becoming a bigger portion of Snapchat's revenue. You could go with Snapchat Plus, 250 gigs. That's a lot. It's only for $5 a month. They have so many customers that this could be obviously a very large driver of revenue. I think they have like 5.8 billion in last 12 months. But right now Snapchat Plus is only around like 13% of their total revenue, and advertising's the bigger driver of that. I mean, like Snapchat's like a OG stock. Everyone, obviously, it's one of the largest social media platforms. So there's no like DD or analysis you have to do there to find it. I don't even know what these advertisements are. It's insane. But they are building the specs. I don't know if this is the best strategy for them because it does cost a lot of money to build it out. I would much rather them just focus on adding features into their app, and which don't cost anywhere near as much money. This is like a very big gamble and outside of their scope, in my opinion. I'll do a lot of like scraping on Twitter though to find stocks. Unity was one where like, I knew what Unity engine was just because like I played video games in my life, but Unity came across just through like Roaring Kitty, right? Roaring Kitty was big on GameStop. I traded GameStop, and then he tweeted about Unity, and so that just made my what's my favorite animal? Probably the panther. You know what I'm saying? A black panther. What's your favorite animal? Let's see. Russia banned Snapchat. I don't think anyone really cares. This is at least positive here. Someone's betting 3.9 million on $10 calls. 100,000 volume on that candle. Hamster is a good one. It's definitely top 5. There you go. Now it shows. I wonder if this, let me check this on my phone because I don't think I've ever gotten this notification that my cloud storage is full. Maybe I just don't have enough. Yeah, I might not have enough. This person has 65 gigabytes. I feel like I definitely have more than that. Well, let's see. This is for stock performance. This is like one thing that's pretty interesting. Yeah, the CEO of SoFi, they have a stock performance incentive plan that includes a $35 share target. Right now, SoFi is trading at $28. It sold off a bit after hours because of the S&P 500 inclusion, but it's probably going to be flat on Monday or green. Like, I don't think it's going to sell off just because they didn't get added. I think at some point they will be added to the S&P 500. But the CEO, I think Charlie Munger said it best, show me the incentive and I'll show you the future or some shit like that. But basically, the CEO is incentivized to get the stock price up to $35 a share. 90 trading days. The 5-year window, the anniversary. Yeah, so there's these 3 targets for the CEO to reach to be paid out. And so obviously there could be all different kinds of announcements and things like that for him to pump his stock price. so then he can actually hit his award. Yes, let's see what the schedule is. No, I'm not a full-time trader. I actually have another whole desk set up right here where I do all of my like actual daytime job, which I work in tech, so I'm fully remote, which is kind of nice. But yeah, I do work a lot, so it's like maybe not during work hours, but I'm like pretty booked like all week because I'm trading in the mornings and then trying to get all of my work done later in the afternoon or even at night. Yeah. Let's see. Pretty much all my money just gets filtered, siphoned straight into Nebius's stock. I guess there's no like specific date, but yeah, I mean, this is just like a chop fest consolidation here from $25 to $32. I would not be surprised at all if we do eventually break out much higher here. It's a decent stock to wheel as well. Like I think the premiums are pretty good if you wanted to sell cash secured puts or buy shares and sell covered calls. Financials should end up doing really well with all the rate cuts. Like the sector is trying to break out. So SoFi's in a similar pattern here. Just a lot of consolidation in a range. Do you need a video editor to ramp up your video production? I mean, I guess yes and no. Most of the people that have reached out to me for video editing are pretty awful. It just feels too corny and cookie cutter like every other YouTuber. But yeah, I don't think I've like found my style of making videos yet. I just like have too much going on to like put a lot of time into the edits, but I do know that there's a lot of value in that, especially like for newer viewers coming into my channel. I do need to make the content better. It's like different audiences though, really. Like some people can make it work with just talking with a whiteboard or just talking over a chart. I need to try to do something a bit different to grow. Yeah. Let's see. I'm hoping Bitcoin can break out here. You got like this little lower sneaky trend line that it keeps trying to chop through. It got to close over a few times, but this area is just like a chop fest. Like you can see how much it moves here historically. If it can get over 91K and hold here, really that's 92.7K. It's actually a little higher now. Let's see. Yeah, it's more like around 93.2K. If we can get over that, I guess could probably just use the candle closes of these 2 days. But you can see here in the past, like that's also an area of where it's flipped, right? So if we can get over 93.5K, then we can have a stronger move towards 97 to 100K. 20 Nebius shares, I'll be your video editor. No thanks. That's a lot of money, especially in the future. I don't think MSTR did not do well on Friday. We need this to go. Did they sell off because they weren't included? Not really. Dude, I don't know what's taken Amazon so long. They've only released positive things in the last couple weeks. Obviously, AWS is growing. That reaccelerated. They had all this news around Anthropic. I know there's like Google and the TPUs, right? But Amazon's developing their own chips. We saw that headline. They had an OpenAI Fugazi deal, and then now they're rolling out 30-minute deliveries. It just feels like Amazon is now the last to go up, right? Like we had Apple that was like dragging its feet for so long, and then it's had this crazy run. Google was also kind of dragging itself back here during the time, and then it's had the crazy run. Google's always been like relatively cheap to the other Mag 7, like just looking at price to earnings ratios. Tesla also is kind of lagging behind. We had this bit of a washout to Elon's cost basis in the 390 range. So, and we filled this little mini gap that it remained open. So now it's looking more likely that we're going to break out here above this more recent highs, like 470s. There's a lot of bullish call flow as well, and obviously the pivot's going to be to robotics. There could be a lot of like news around robotics next year, like switching to physical infrastructure and AI versus software. So I could definitely see Tesla breaking out to new all-time highs. And then, of course, like we got news around SpaceX maybe potentially IPOing next year. So that's all very positive for Elon. So I think he's going to be in the headlines quite a bit in 2026, and that's probably going to be really good for Tesla stock. I think, but yeah, like looking at everything, when you just like kind of scroll through all the large cap stocks, like obviously Meta sold off quite a bit. Meta will also probably fill this whole gap at some point. So it's a pretty safe buy. Yeah, I think like Amazon, Meta, and Tesla, that's like what I've been pushing the last couple weeks. I think those stocks are now lagging behind. Like Microsoft already had that really crazy run. It kind of looks like a double top. They're starting to bounce a little bit. It might just like consolidate here and drop again. But like when you look at which stock is most likely going to do the best, it's the ones that haven't had the really big 2025. And so that's Amazon, Meta, and a bit of Tesla. Like Tesla's got to get over this 488, since pretty much every other stock now has broken its all-time highs from like 2024, early 2025. The interesting thing is like IWM is trying to break out of all-time highs here too, right? So like, is there going to be sector like small caps? Is there going to be a rotation there? Are they going to have a really big 2026? I'm not really betting on that. I still think tech is going to end up being the leader for next year as well. But yeah, looking at this sector, QQQ, like this is breaking out of this downtrend. You can see here. So like all the indices have broken out from this little capitulation move, which was all into like low volume gaps or low volume shells, filling gaps. There was high down volume, put to call ratios were really high. Extreme fear was really low in like the 6 to 15 range for some time. The VIX was hanging out over 20 for quite some time. Now the VIX is at $15.40. So volatility is starting to drop. Fear is starting to leave the market. And usually the market has like rotations, right? It's not moving in a straight line all the time. So the idea would be that we see the indices go higher, and then the risk assets, which usually pop in the later half of that like complete rotation. If you're just thinking of it from like a time period of when risk and when fear starts to leave the market, the market starts to rally. There's probably like certain sectors that do well, but then the riskiest assets usually have the really strong run at the very end of that time period, and then we have another correction in the market. So the idea now is like, you look at Nebius, which had that big run, and then it had this big downtrend. Now that fear is starting to leave the market, the hope is that things will start to stabilize a bit, and then Nebius will start to participate in the broader market rally. And then once that happens, maybe there'll be some sort of correction or pullback, and that probably will happen with VIX probably heading closer to $13 to $12 as it, you can see it's come down here multiple times in the past, like 13 to 14, even down to 12. That's an area where you can either start buying some hedges on your portfolio or playing the VIX. Those are decent strategies if you want to just have a hedge if things are looking a little too hot in the market, which is probably what we should have done, but we've just been very bullish overall because all the rate cuts, and really Trump is doing everything he can to keep the stock market going higher. Chart reading tutorial. I mean, I've kind of done them in the past, or I like layer them into my videos where maybe I'll like talk specifically about one indicator or like trend lines, how you would actually draw those, or the VIX or volume profile and things like that. I should probably put together like the problem is it's just like a lot of work, right? Like if I want to cover all the things, all the basics, there's a lot to talk about with that, depending on the audience's experience level. But it is a lot of hours to put all those things together and outline it in a way that's like easily digestible. So in most videos, I just try to layer like nuggets of information that you can use in your trading, because everyone looks at the market a bit differently. And the way that I've learned over like the years that I've been trading is just by finding what works or looking at what other people are doing and just stealing like information from them, right? Not every person is going to trade the same way, and some people are going to have certain things that are good and certain things that are bad, and it's just up to you to like determine what those things are and then just take what works, right? Like the market sometimes changes, it goes through different phases, and what might be working really well in like a trending up market is obviously not going to do very well when the market starts to turn. So there's just like a lot of different things and strategies that you can do just depending on what the market is giving. Like there might be the market might be dropping, but there's obviously like a bull market somewhere. There's always stocks every single day going up. Your Amazon 265 February calls. Let's see. So let me clear out some of the drawings here. So Amazon had that big pop on earnings. It sold off. It more than filled the gap. It even kind of came back down here and retested that breakout of this downtrend. Now that it's trending higher, it looks like it's kind of getting sandwiched in between even like the 21 EMA, and then you got this cluster here of the 50 and the 100 day acting as support. So that's pretty solid right now. As long as it holds this 228 area, then I'm still bullish on Amazon. When you're looking at Amazon though, and how much time that you have for your contract, it's not only the strike, it's whatever you paid for that option. So I'm not sure what you paid, but your break even would be higher than 265, especially depending on like when you actually bought it. But you can see from the current price to get up to 265, you need like a 16% move on the underlying. And you need to do that by, what is it, the 20th? So we'll say like it has to get to like 270 by your expiration for you to like break even, assuming you paid $5 for it. That's a 17.7% move. So that's a pretty big move. It's not that it's not doable, but it is something that you probably are going to have to manage. So probably the best strategy is obviously that the market can give you the opportunity to roll your position. You want it to go up in the short term because those 265 calls will participate more than like the March or the May or the April expirations. So what I'd probably be looking for is like a move back towards 239 to maybe roll. You can see that that area has been resistance and support in the past. If you want to take a little bit more risk, you'd want it to try to get back and fill through that gap that it formed on earnings. Maybe roll around 245. That's probably the safest bet if the market gives you that opportunity. If it breaks below 228, then it's not looking very good, and we're probably going to fall back to 216, which has been really like a hard support, as well as the 200-day moving average is there. So it's not in the best position. You're kind of in no man's land right now. You're at least at support on these moving averages. Depending on your risk tolerance, you could try to hold for longer or try to roll depending on what the market actually ends up giving you. But if you are trying to roll your position and take some risk out, hopefully you can get that positive direction on the stock price first. So that's probably what I would be looking for. Try to get through like back to this low volume shelf and then probably roll somewhere around like 240s to 245. And I would roll those probably just a month. I think like December and January are often the most bullish months in the stock market. Just if you just look at seasonality, obviously they're going to be cutting rates. I think Amazon is still trailing behind the other Mag 7 in a lot of ways. They have been only announcing positive things. It just might be going into year end. It might be a little bit weak, but yeah, I'm hoping that in Q1 we can have a really strong move. It does move quite a bit. Like how quickly did it move down to here? That was in 3 weeks, 15 bars, 21 days. You had a 17% drop. So it's still very possible that you could just diamond hand your position and make it back to break even or even in profit, just depending on when it gets back up there. But yeah, if you like bought that position after earnings, you're in a bit of trouble. If you bought it before earnings, then you're probably maybe slightly down or flat or, probably close to what you bought it for. But yeah, it's just kind of like a lesson learned to take some profit off the table if you didn't take any profit after the earnings pop. Yeah, sometimes like not every trade is going to go well, and then it's like really up to you to try to think through strategically what you're going to do with that position. Obviously, it matters a lot more when you're trading options because you have not the luxury of time anymore. But trying to manage your position and roll out when you need to is probably the thing that I'd be looking to do the most. You could also use a different strategy. So say you have the February calls. Another way you could do this would be by selling further out the money calls. So you could say the stock price ran up to 245. You could sell the 270 February calls, and you would just basically create a spread on that position and take some money out. And then if it goes back up to 265 and it closes over 270 by expiration, then you're going to realize the max profit on that spread that you created synthetically by selling the 270 call. So there's a couple different strategies you could do there, but I hope that helps. Let's see what else. I guess we got an hour and a half before futures open up. Would you guys want is there video topics or specific stocks? Like, should I make a video for one specific stock, or should I cover like 5 stocks at a time and things like that? Like, I could do a deep dive on a specific stock and look into fundamentals, the stock chart, the management, leadership, all those things. Or I could put together a video that covers like 5 different stocks. I don't know. I've just been trying to like spitball a few different strategies, things I could end up doing. What is Amazon? Yeah, Grab has been pretty awful as of late. Yeah, sometimes I'll hedge with VIX or buy SPY puts or specific stock ticker puts on as like a hedge against my portfolio. I was doing that a lot more in the beginning of the year. But right now, yeah, like even though growth had a pretty big pullback, more than I thought it would, the overall market didn't end up selling all too much. But yeah, in some cases, it's actually worth hedging if you want to keep a long position. You know, just offset some of the potential loss. But right now, I'm just like, it's in an uptrend. We're in a bull market. They're easing. I'm not really looking at trying to hedge my portfolio in any meaningful way. Yeah, I mean, because like right now, there's like the stocks that I keep hammering, like Snapchat, Upwork, and Zeta. I still think Unity obviously is a good stock, especially with all the recent developments. And like the CEO is doing really well at that company. Grab is kind of annoying in the last like several months. It had that big breakout, but it just can't seem to sustain any sort of uptrend. I still think they're a good company to own for the long term. It's just, you know, some of us are pretty impatient. But yeah, maybe like piecing together a deep dive on some stock. Like I could do it on Nebius. I've kind of covered Nebius in totality across many videos, but not in one video. But there's so many other people covering the same stock now. Like there's not really too many stones to turn over on that one. I'm trying to grow. I should look at hedging and stuff. To be honest, if you're like a small account, like hedging in a lot of ways is not the best feeling, right? Because when you're hedging your portfolio, say you're just like long a stock and then you buy puts because you're afraid it's going to go down. You're basically just like adding some protection. But if the stock goes down, you don't feel that great because you're losing money on the stock. You're participating on the puts, but in all, you're kind of just like remaining flat. And that's obviously a win rather than losing money. But in a lot of ways, I think the best way to hedge is just by selling covered calls because you are long the stock. You want to root for the company that you own. And so it's only very strategically that I'll actually use puts or VIX calls to some sort of hedge. And that's usually when I think the overall market is going to have a correction. And I don't feel like selling my shares of a company, or, you know, maybe I'll probably still sell covered calls in that scenario. But usually I'm not buying puts on anything that I actually own because I'm rooting for the company to do well. But yeah, like in most cases, it's better for you just to weather the storm if you're actually picking a good company. If it was a bad company, then you're kind of shit out of luck. It's not going to be around. Stock price isn't going to do anything for you. Zeta is like, Zeta honestly should be trading much higher. like Zeta's growing very rapidly. The CEO is constantly in interviews. He's like marketing the company, doing interviews with even people on Twitter now. He's trying to do a lot to pump the stock, but the stock is actually performing well. And I think like Athena, which is their AI voice assistant on the Zeta 1 platform, when they start rolling that out and there's more customer adoption, at least like historically, I think they had something called Zoe. It was like a chat bot assistant. And really it's just how often a customer is using or staying on their platform. And those users had far more hours using the platform than users who didn't. And I think Athena is going to be like a bit of a game changer, at least a lot easier as like a marketing pitch to larger enterprises to use their platform and make suggestions, draw insights, conclusions, like a lot of those things. So it is a really cool feature for their platform, and they own all the data. So it's like a proprietary thing. Like this stock is trading at 4.6 billion. I mean, it hit all-time highs at 38. So you got a double in there. But this is starting to break out of this like pattern here. This is like a bit of a broadening wedge after having that explosive move on earnings. They beat and raised, I think, 17 times in a row now. They just completed the Marigold acquisition, and the CEO said that it was accretive since day one. I think there's going to be a lot of cross-sell, and I could see, well, Zeta already did raise their guidance for next year. But yeah, it is like kind of coiling where all these moving averages are. It keeps holding the 200-day, so that's really solid. It's like $16 to $19. You're not going to really care when it's trading 25 plus. That's a pretty big jump on the underlying stock price. Well, TE is just like, they're still in the scaling out of their facilities, right? Like long term, there's people giving price targets in the $8 to even up to $12 range. Most analysts, I think, have it $8 to $9. This is very much like a turnaround kind of thing. But there's so many tailwinds around energy, securing the power for all the data centers and all the things that the Genesis mission wants to accomplish. So there's just more demand on the power grid, and the US right now is looking at nationalizing certain sectors, obviously, like Intel, and then EOSE. That was another one where they might actually at least have the option to buy shares of the underlying. T1 Energy could also be the same thing. The CEO of T1 was hanging out with JD Vance, I believe. I don't think this was deep fake. Could have been. But yeah, I mean, there's just there's a lot of people covering this stock now. It is growing quite a bit. Sometimes that's not always the best thing. Usually that's positive in the short term, but might not be in the long term if it's too much of a crowded trade. So I think right now, very, very bullish, but it could definitely have a pullback on dilution news because they're in hyper growth right now. It's not cheap to build out these big facilities. But I think they're like 2.5 gigawatts or something like that. Production, Q4. Yeah, so this G2 is going to take a while to actually get up and running, but their G1 facility obviously is already operational. But yeah, I do like it for the long term. It's just you are going to have to hold through a lot of dilution. It's just the name of the game when a company is scaling up and trying to grow, build out that capacity. Right now, it is starting this really big breakout of this multi-year bottoming pattern. It consolidated, it broke out. Now it's pushing through this low volume area. Like I wouldn't just outright buy shares right now it's a bit risky because it is going parabolic. It went up like 130% in a week or so. If it does get up at like $6 to $8 range, like I'm probably going to lose my shares because I've been selling covered calls if it actually holds in that range. But I don't really care because I've made money on it. But yeah, you could hold this stock longer term. It's only 1.24 billion market cap right now. You know, once its G2 facility is operational, and depending on where the Genesis and all this capex and power needs come from, T1 could be a much larger company. So we'll see how this trades. But yeah, I would be selling covered calls strategically just because there's so much risk around dilution. Like, I'm sure the CFO is just watching the stock price every single day. It's just like, all right, I'm going to drop the hammer on them now because it's gone up enough. But yeah, I think in the $6 to $8 range, it's almost inevitable that they'll dilute another 10-12% or something like that. And if that happens, then you might be able to close out your covered calls at a profit, maybe sell some cash secured puts, things like that. This is actually a pretty decent stock to wheel because there's so much premium interest on the options chain. Is it this? Or it's option charts. Yeah, I'm kind of looking at that same thing, but it's not worth like rolling out, especially after such a large move, because at least the market usually reverts back to the mean. So even though it's blowing out my break even potentially here in the next week, I'm probably still not going to roll it because it could still drop by January or April or whatever expiration that you sold. And so chances are there'll probably be dilution again. It'll be under $6 by then. But yeah, there's not too many expiration dates right now, but it's definitely a decent stock to wheel because it's so cheap, especially if you have a smaller portfolio. You know, to own 100 shares, it's only $583. Like most of these calls are already in the money. There's a lot of interest. I think the IV is pretty high as well. Yeah, 161% IV. And that's only for like December 19th, right? Like this trade for 115. So it would have to go to 615, which obviously is doable. But yeah, like selling an April $6 call, 178, it's probably not the best. Like selling a 7.5, that feels pretty good. $1.20, so break even is 870. And then you have the ability to appreciate on the shares. Pretty good overall. Uber's the safest bet. Yeah, but we're trying to make money. I remember shorting Uber back in 2022. It's had a crazy breakout. Doing pretty well on the AV ride announcement. Hopefully the market starts to realize that Nebius owns AV ride. So here's that. Nebius based in the Netherlands. think, I guess what is this? Expanding with Serve in Fort Lauderdale. Sidewalk robots. What does this even look like? I feel like these robots look so stupid. Just like imagine this thing rolling down the street. You run it over with your car or your bike. I guess what do we have coming up? So we got job openings on Tuesday. Inflation expectations at 11 tomorrow. Obviously the big thing in this week is FOMC. Jobless claims Thursday. Yeah, it's really just what's the Fed gonna end up doing? Let's see, does AB Ride look as stupid as this? Yeah, it's just more chonky, lower to the ground. Just like imagine these just like rolling around everywhere. It's just like a cooler on wheels. Got the whole fleet rolling out, the whole gang. India's building solar. Do we have any good games tonight? Let's see. It's NBA. Football Sunday. I don't know. I don't really watch football anymore. All basketball. Just gambling in the stock market. That's it. Let's see. Probably going to get off soon, but probably going to go live during market hours a few times, at least when work isn't so busy. I'll try to get out another video. Maybe I'll film one after I get some food, but yeah, just let me know how this went. Join the Discord if you haven't already. Hope you guys have a good Sunday, and I'll see you later.